Short exercise 3-16, use worksheet to enter adjustments and create adjusted trial balance. So we can't see the adjusted trial balance columns yet because we need to do the adjustments first. So at the end of the accounting period, before they enter the adjusting entries into the journal, the accountants use a spreadsheet to summarize all their adjustments in the spreadsheet first. And then once they get done with the spreadsheet, they will enter the adjustments into the journal. So on the far left column, we have the unadjusted trial balance, and a lot of students, when we get to the project, forget where these numbers come from. These balances like the cash, 800, supplies, 900, those come from the ledger and represent our account balances before the adjustments are done. So the instructions say Braids by Sabrina has begun the preparation of its worksheet as follows. So complete Braids by Sabrina's worksheet through the adjusted trial balance section. In the adjustments section, mark each adjustment by letter. So we have an image of the worksheet here, but we need this open as it is provided to us below down here. And then our adjustment data is right here, year-end data. So we have supplies on hand at the end of the year, 300, depreciation of 1,000, accrued interest expense of 600. So when we're doing an adjustment to the office supplies in A here, what this means is supplies on hand, it means it's the amount of supplies you currently have. So what happened is you send the intern to the office supply closet, or in this case just supply closet, and you have the intern count the supplies, and then they come back to you and say we have $300 worth of supplies on hand, meaning we have 300 left. So how much did we have according to our accounting records previously? We had 900. So our current balance is 300, but it was 900. So how much did we use? So we have to lower the supplies account of 900 down to 300. And in order to do that, we have to remember supplies are an asset. So how do we lower an asset? We lower it with a credit. And that's going to be a credit of 600 because 900 minus 600 gives us supplies on hand of 300 at the end. So we're going to go ahead and credit supplies here under A for $600. And again, we put an A here because we are working on this adjustment for A for supplies. And this is helpful to put the letters here because if we ever need to come back to the spreadsheet in the future and we've forgotten what we've done, these letters here help us match up the data to this information here. So now we're going to need a matching debit account. So what account shows that we've used up office supplies? It is supplies expense, and that is down below here. So let's go ahead and scroll down. We have supplies expense here, and a lot of companies will just call this office supplies, but they chose just to call it supplies expense. So I've got a debit here for adjustment A, and that's 600 to balance our adjustment. So now let's do adjustment B. So we have depreciation. So it looks like somebody's already calculated the depreciation for us. So we don't have to go through that straight line formula, but we do know that the result is we have depreciation for this time period. So now we just need to record the adjusting entry. So we need a debit. So what's the debit account for depreciation? It is depreciation expense. So we have depreciation expense down below. For equipment, doesn't look like we have any other depreciation expenses, so they're referring then this depreciation to the equipment. So we're going to need for B, we're going to need to debit the depreciation expense. And then what is our credit account? Remember, whenever we record depreciation, the other account is accumulated depreciation. And which way does accumulated depreciation go? Well, it tells you in the name of the account. It accumulates. It goes up. And what type of account is accumulated depreciation? It is a contra asset. And how do those go up? Their plus side is the opposite of the asset. So to increase it, it is on the credit side. So we're going to go ahead and credit $1,000 for accumulated depreciation equipment. So we can scoot this out of the way to get there. So that is still B we're working on. A credit of 1,000 for the depreciation, for the accumulated depreciation account. And now for C, we accrued interest expense of 600. And like I have said so many times before, when something is accumulated, it is not yet paid. And that something that has accumulated is interest. So we owe some interest, and the reason we know it's owed is because accrued tells you it is owed in this case. Because again, accrued means something accumulated, not yet paid. So we can't involve cash because it has not been paid yet. So we need to increase interest expense by 600. And again, expenses increase with a what? A debit on the left side. So this is going to be C for interest expense, a debit for 600. And since it has not been paid, we owe it. So it is a debt, a liability that shows that we owe interest. And that would be interest payable. So move this out of the way here. We have interest payable, and again, with payables and liabilities, those increase with a what? A credit. So that's going to be a credit to the right-hand side for C for 600. And now if you're having trouble telling what row you're on, you can use the data table to block off the other entries here to see where you are. So now we've completed these adjusting entries. So now what we need to do is add up each of these columns. So we need to add the debit column and also the credit column for the adjustments here. So this one is going to be 2,200, and thankfully it matches here for 2,200 on the credit side. Because again, in the adjustments, debits need to equal credits. So now let's go ahead and check our answer. Excellent. Okay, so now the adjusted trial balance. So what we need to do is update our unadjusted trial balance, either increase or decrease based on the adjustment that we put in here in this first step. So for the first one, there was no adjustment here for cash. So cash stays the same, 800 as a debit. Let's see if we can squeeze that up there. And then with supplies next up, we did have an adjustment. So we credited 600. So that decreased our supplies down to 300. So our balance will be here. And again, since we credited it for 600, we lowered the account. So now that new balance is 300. And it tells you also in the adjusting entries that they gave us. So now let's move down to equipment. That's the same. We did not adjust it. And then we have accumulated depreciation on equipment. And it appears there was a previous balance under the credit side. And there was an additional credit of 1,000 added to it. So then we're going to have a credit balance of 2,000. Now, the most common error in this problem is putting the balance on the wrong side. So putting your debits and your credits. And then the second most common is not adding the adjustment to the unadjusted trial balance. And I have been guilty of this myself and had to re-record this part because of it. So again, you'll notice we had a previous balance in the accumulated depreciation, and that's why we added the adjustment, and then that became 2,000. So then we can move on to our liabilities here. We have accounts payable. We did not touch that, so that remains a credit of 200. And previously we didn't owe any interest yet. However, with the adjustment for C, where we got some interest expense accrued, that is going to become 600 as a credit. And then notes payable, we didn't touch. Our equity accounts, our capital revenue, and rent expense were not touched. However, these expenses we did make some adjustments to, so we can go ahead and enter these four balances through since we didn't make any adjustments to them. Okay, and then supplies expense we have more of, so that becomes a what? Debit of 600. And then depreciation expense on equipment, that is a debit of 1,000 again. The regular balance for expenses will be on the debit side. And it's very easy to miss this part and rush through this, but you'll notice with interest expense, there's previously a debit balance here for 600, and then now we have an additional $600 of interest expense, so this becomes 1,200. And that is easy to miss because, again, the numbers, you'll see 600, 600, and sometimes rush through. But then we can go ahead and check how we did here as far as the balances. We need to make sure our debits equal our credits. So we'll go ahead and add these up fast. In this time, we'll try to do it quick. 4,500, 100,000, and then 1,200. And that should give us a debit balance of 27,500. That is correct on my answer key. That means our credits should also be that same number. So we're going to go ahead and add all of those through. Always double check your work. All right, and that should give us, yep, 27,500. Okay, wonderful. So our debits match our credits. Now double check that our balances are on the correct side. So assets should be a balance on the debit side. Contra assets, this accumulated depreciation, should have a credit balance. We have some liabilities that have a credit balance. And then we have our equity accounts, the capital, the revenue, the expenses. So the capital and revenue have a credit balance, which is the normal side there. And if you forgot what side the balances should be on, look at your accounting equation over here. Which side has the normal balance? It's always the plus side. And then we also have our expenses down below, and those have a debit balance. So those all look good. And then you hope and pray your debits equal credits here in the total. So let's go ahead and check our answer. Nice work. So in the real world, the next step would be to take these adjustments here in this adjustments column and actually put them in the journal. And now remember, this whole thing is just a worksheet, just a spreadsheet, and just because we put the information here does not mean it is in the journal. This is just to help us update the account balances. So like I said, in the real world, the next step would be to enter these into the journal, and that is it.